Hello everyone. In last session we discussed about the concept of the leverage, and we discussed about the three types of the leverage, and these three types were financial leverage, operating leverage, and total leverage. In this in this session we actually calculate these three leverages by the help of this example. In this example, I have a data that this cable incorporation company expect a sale of 20,000 units, and the sales price is 5 per unit in coming year, and it must meet the following obligations. The variable operating cost is $2 per unit, the fixed operating cost is $10,000 in total, and interest expense is $20,000, and preferred dividend is 12,000, and the firm is in a 40% tax bracket, and total number of common shares are 5,000. By the help of this data, we can calculate the degree of operating, financial, and total leverage. Let's start with calculating at first we calculate the EPS, earning per share. For first requirement is to calculate EPS for 20,000 units, and second requirement is to calculate EPS for 30,000 units. So here I can calculate a Q here. Q is 20,000. For a Q 30,000 unit sale 20,000, first we calculate the EPS for this 20,000 units. So if Q is 20,000, then we can calculate a sales amount by multiplying 20,000 multiplied by per unit sales price. So this is Q and this is P. So multiplying quantity by price is equal to total amount is 1 lakh. So total sale is 1 lakh. So is equal to revenue. So total expected revenue when we sell 20,000 unit is equal to $1 lakh, and if we want to calculate a total variable cost, we will multiply these 20,000 units multiply by the variable cost. This variable cost is 2 per unit. The operating variable cost is 2 per unit. So answer is equal to 40,000. So this is Q, and multiply this Q by variable cost per unit. That's how we can calculate a total variable cost. So total variable cost is equal to 40,000 if we produce 20,000 units, and the fixed cost is given in this scenario, which is fixed operating cost is 10,000 in total. So 1 lakh minus 40,000 minus 10,000 is equal to 50,000, and then we deduct interest expense. Here interest expense is $20,000. So 50,000 minus 20,000 is equal to earning before tax is equal to 30,000. Then we pay tax to the government, and the tax rate is 40%. Take a 40% of 30,000, which should be equal to 12,000, and 30,000 minus 12,000 is equal to 18,000. So after paying tax to the government, we have an income of 18,000. Out of this 18,000, we pay preferred dividend, and preferred dividend is 12,000. So preferred dividend is 12,000. 18,000 minus 12,000 is equal to 6,000. So now we have an earning available for common stock, which is equal to 6,000. Now we can calculate EPS, and the formula of EPS is earning available for common shareholders divided by number of outstanding shares. So earning available for common shareholders in this case is equal to I should write it here, 6,000 divided by number of shares are 5,000. So 6,000 divided by 5,000 is equal to 1.2. So earning per share is 1.2. So and second requirement is to calculate EPS for 30,000 units. For 30,000 units, now 30,000 multiplied by 5 is equal to 1 lakh 50,000, and 30,000 units multiplied by variable cost, which was 2 per unit. So 30,000 multiplied by 2 is equal to 60,000 is the variable cost, and fixed cost remains same whether you produce less or more. So in both of the cases the fixed cost remains same. So 150,000 minus 60,000 minus 10,000 is equal to 80,000. And then we pay interest expense. Interest expense is the fixed cost, it remains same. So after paying interest expense, we have an income of 60,000. Then we will have to pay tax to the government, and when we take 40% of 60,000, it is equal to 24,000. So it means that we will pay tax of 24,000 to the government. So 60,000 minus 24,000 is equal to 36,000. So now we have an income after tax which is equal to 36,000. Now we pay preferred dividend, which is a fixed cost, remains same. So after paying preferred dividend, we have an income of 24,000. So now we can calculate the earning per share for 30,000 units when we produce 30,000 units for second scenario. So here we have an income of earning available for common stock 24,000, number of shares are 5,000. In this case, if we sell 30,000 units, then our earning per share will be $4.80. So now we can calculate, at third step, calculate the degree of operating leverage. Now we can calculate a degree of operating leverage. I have already mentioned that by using this area we can calculate a degree of operating leverage, and the formula of the degree of operating leverage was percentage change in EBIT over percentage change in sales. So how can we calculate a percentage change in EBIT? This 20,000 is the base level sale, which we can say this is the current sale of the company, and we are calculating actually if sales become 30,000, then what happen. So we can calculate a change in EBIT by just take a change between these 2 points. If we sell 20,000 units, our EBIT is 50,000. If we sell 30,000 units, our EBIT will be 80,000 units. So the change between these 2 points will be the change in EBIT. So simple formula of the change is new minus base over base. So our new EBIT is equal to 80,000. So by using this formula we can calculate change in EBIT. So change in EBIT will be equal to 80,000 minus 50,000 over 50,000. So 80,000 minus 50,000 over 50,000 is equal to 0.60, or we can write it as, if we multiply this whole thing by 100%, multiply by 100, then answer will be equal to the in percentage. So our answer is 60%. So it means that here change is 60%. So from base, our current sale, which is 20,000, if we sell 30,000 units, then our EBIT will increase by 60%. Put here 60% plus. Now we can calculate a change in sale. Change in sale can be calculated by taking a change between, calculating a change between these 2 points. So again, use this formula to calculate a change in sale. So if we apply the same formula for calculating the change in sales, so new sale is 1,50,000. Old sale was, our base sale was 1 lakh divided by 1 lakh. So answer is equal to plus 50%. So it means that from base sale to new sale, the change is equal to 50%. So it means that if we sell 30,000 units instead of 20,000 units, or in other sense, if our sale increases from 20,000 to 30,000 units, in percentage form this is equal to the 50%. So if we divide 60% by 50%, then answer is equal to 1.2. So 1.2 is the degree of operating leverage. So it means that we can interpret this 1.2 as, if sale increases by 1%, then EBIT will increase by 1.2%. If sale increase by 2%, then how can we calculate a change in EBIT? 2. If sales increase by 2%, then multiply it by operating leverage. answer is equal to 2.4%. So if sale increase by 2%, then EBIT will increase by 2.4%. If sale increase by 5%, then EBIT will increase by 5 multiplied by 1.2. It should be equal to 6. It should be equal to 6. So that's how we can interpret this degree of operating leverages. And simply, if sale increase by 1%, then EBIT will increase by 1.2%. If sale decreases by 1%, then EBIT will decrease by 1.2%. So that's how we can interpret this. In second stage, we calculate a degree of financial leverage, and the formula of degree of financial leverage was percentage change in EPS over percentage change in EBIT. So we have already calculated the percentage change in EBIT, which was 60%. Here we have already calculated the percentage change in EBIT. Now there is a need to calculate a percentage change in EPS. So to calculate a percentage change in EPS, we should calculate the change in between these 2 points, base EPS and new EPS. So we can calculate the change in EPS by using the same formula, new EPS minus base EPS over base EPS, and answer is equal to 300%. So if our sale increases from 20,000 to 30,000, our EPS will increase from 1.2 to 4.8 per share, and in percentage form this is equal to 3%. It means that our EPS will increase at a rate of 3%. So overall answer here is for DFL is 5. So degree of financial leverage is 5 in this case. So we can interpret this 5 as if EBIT increase by 1%, then EPS will increase by 5%. If EBIT decrease by 1%, then EPS will increase by 5%. In other sense, if EBIT, if I just ask one question, if I have a one scenario, if my manager asks me, if your EBIT increase by 5%, then how much EPS will increase? If your sale increases from 20,000 to 30,000, I can answer it by degree of financial leverage. If EBIT increased by 5%, then EPS should be increased by 25%. How can I calculate the 25%? So here leverage is 5. So to calculate if EBIT increases by 5%, then EPS will increase by 5 multiplied by 5 is equal to 25%. So that's how we can interpret the degree of financial leverage. At last, we will calculate the degree of total leverage. And degree of total leverage, the formula of the degree of total leverage was percentage change in EPS over percentage change in sales. So to calculate this degree of total leverage, we have a percentage change in EPS. We have already calculated the percentage change in EPS, which was 300%, and we have also calculated the percentage change in sale, which is equal to the percentage sales, which is equal to the 50%. So if we divide 300% by 50%, then answer is equal to 6. So it means that we can interpret this 6 degree of total leverage as if our sale will increase by 1%, then our EPS will increase by 6%. Okay, if our sale decrease by 1%, then our EPS will increase by 6%. So that's how we can calculate a degree of operating leverage, degree of financial leverage, and degree of total leverage. Thank you so much.